So, hello, and a massive hello to everybody. Welcome to a new quarter, 50 pips, rocking and rolling. No trade calls, no recommendations, or response on the own stuff here for educational purpose only. Welcome to another one of these Substack videos. So, I had some questions on DXY, and basically, I thought we'd do a very quick video to discuss what the dynamics here and technically what to focus on the dollar, because clearly we're at could be at a key inflection point. I think the easiest way to look at this is to step back at a very bigger picture of you and go back on a monthly, right? So if we go back on the monthly, what do we see is, and again, I'm not a huge fan of, I prefer horizontal lines, but here what we're seeing is the market is kind of trying to break down here, right? What we've had is we had this pattern where it was trying to move higher. And then all of a sudden, recently, the key thing is you have this series of lower highs, right? And number two, you have this breakdown. So right now, as you can see, the focus is that the bears are in control. And what they need to do, especially, is hold it below this breakdown zone, which pretty much is the 100. Now, again, you can look at this in a gazillion different ways, but I think for simplicity's sake, the key reference points here are that the bears have to defend and have this going for them. They have the lower high here, and they have, so number one, and number two, they have the breakdown at the 100. So could you see a situation where we pop here aggressively, they don't hold the breakdown, but we still hold this series of lower highs, and then this breaks down? Sure, but for all intents and purposes here, let's just focus on this and this. So what we're seeing is a kind of like this ball underwater action, right? Where the market is trying to hold here and the 100 is capping it lower. And these are the key reference points. So going back on the weekly, again, you can see it, right? How many times here since essentially this breakdown back in May, the market is keeping the pressure on. Every single time we pop higher, look at these wicks, smack down, smack down, smack down, smack down, keeping the pressure on. But equally, right, we're still, this summer low is still holding, and we've had 2 weekly candles where we reversed. So I've seen here a lot of people talk very confidently about we're breaking down here or popping higher. And I think the situation is a little bit tricky here. Now, of course, I think you want to watch this because, as we said, this is a classical, could be a ball underwater action. And if we pop higher, even if equities stay bid, it's going to be very difficult for equities to hold a strong sustained bid if you get a big squeeze going in the dollar. However, my base case assumption here is more one of it's too early to tell. It's too uncertain because, as you can see, both this wick or these wicks, at any point here, this market looks super bullish, right? Because we're trading right at the highs of these candles. And here, 2 weeks ago, it looked super bearish because we're trading right at the lows, and the close painted a very different picture. So here, especially with the government shutdown, it's hard to see, hard to know what could happen. We don't know if data's coming out, data's not coming out. But I think the focus is don't get don't rush, don't jump the gun thinking we're bearish and we're going to break down aggressively simply because we're trying to challenge these lows. And equally, if we start to pop our head back above into these highs closer to the 100, don't get super bullish for the squeeze unless you get a close confirming. I think the nicest trades here in terms of getting back into swings would be clearly a day close or weekly close below these lows, which probably will open up the next leg of the swing lower. And equally, a day close, week close back above the 100, you would expect to see a multi-day swing giving us a move back into the 103. So the way I would be treating it for now is still, even though those broader picture dynamics are in the back of my mind, I'm looking at this range here, and I would be using the 10-day moving average as a turn point, as a pivotal move inside this range. So it's simply a range trade. I'm interested in failures or breaks at range high. I'm interested in failures or breaks at range high. And intraday, which this 10-day is pretty much lining up with a 50 back of this area, I'm interested at trading this in terms of a bull bear line intraday. But I think there's not an awful lot of edge here, especially in thin liquidity. It becomes very choppy here. I think all the edge, both for longs and shorts, is at the top end of the range or the bottom end of the range. And I think you have to be keep a very open mind, because anything could happen here in the middle of the range, especially as we're going to tape, which is likely going to have a busy headline flow. Okay, that's the way I'm looking at it. Hope it was useful. Wishing everybody an awesome one. All the best. Take care, guys.